you go.
So my impression of the market, and this was just sort of how I traded it, was the to not really trust a lot of the moves to the upside, especially those kind of end of day spikes or the pre-market spikes that those were likely to sell off, and that's what happened on several days this week. So that means you either can trade puts off of that, or you just kind of wait for a flush and then see for it to come back. The tech is still looking kind of weak to me, but we could definitely see a little bit of a recovery. I was telling Tupac earlier that my impression of the flow is that there's a little bit more the out of the money activity is a little further out to the upside than the downside. Like, they're not trying to really break some of this strong support that we're seeing, but it's just not really an environment to swing tech to the upside. I just don't think you can really trust those moves right now. And I think that that rally we had is clearly over, and we're just sort of waiting for what's next. And we're not going to get much clarity until some new Fed activity happens.
Yeah, I'm definitely. I kind of got juked a little bit. If we would have, well, I'll say if I would have just stuck with the, um, it's gonna basically be sideways or down until September. I think I would have been better off because I kind of bought into the rally a little bit, um, even though it felt like shorts were kind of covering, just because of the way the volume was going.
Yeah.
I really thought that we had a chance. Gas prices are going down. A lot of the big retailers cleared their inventory, so I just felt like we were making a little bit of progress, and um, it was just a false start, right? Like, everyone got going too soon, and the volume died, and we're almost back to square one on a lot of things, which is good for that general thesis because I mean we kind of know where we are. Um, it's just knowing how much is priced in. I mean that's the whole game. As simple as you can be right now is how much downside is priced in, and when the numbers come out, are they better than that or worse than that? Whether it's GDP or interest rates or whatever, um, whatever that comes out, or you're kind of gonna have to assess the market in general and see how much downside you think is priced in, and that's real hard. But that's where we are, and September is a huge month. So short term, like this next week, I think it's gonna be real hard to predict day in day out what happens. But I don't think it's gonna be a good week. And then as numbers come in, I think it'll choose a direction that'll be real easy to follow around I think it's the 13th. I think it's the 13th. So that's where I'm at for the month. Is kind of hold on in the beginning here, be real smart. Um, Probably a couple more momentum trades that I want to, and then be ready for the overall trend to take place towards the middle of the month.
Yeah, I'm with you, and it's one of the reasons I shared that SQQQ weekly chart, because I think that definitely has some potential to move up this week, which in fact would indicate a bad week, because that's the tech inverse. So yeah, so I think you want to use some caution there. But that being said, during one feature of this bear market that you have to be aware of is that when the buyers do step in, those spikes can be pretty violent, and so your overall thesis on a stock going down can be fine, but with in options in particular, if your entry is not good, you can get underwater really fast, and you get to a level where you're probably right still, but you don't want to wait it out down 40% or something on a position. So yeah, so it's a time to be cautious and kind of get in and out quickly. I'd be patient as well. Just wait for a stock to get to your level, whether it's upside or downside, and I think that that'll be fine. Oil is kind of tough to trade right now for me. Just it's a little bit overextended, but also could very well go higher from here. So sure. I'd be a lot more comfortable trading Oxy back under 60 again, but it pulled back and it could very well go test that 75, 76. It's kind of tough to say. I think the mid caps are a little easier to trade for me right now in oil, and we'll definitely get to that when we get to the hot list for sure.
Into stocks. For me, real quick, to kind of like bounce the two, I think this is overlooked by a lot of people, and I said it at the beginning of the downfall, but I haven't said it in a while. But fundamentals are really important in trying to predict a stock price, especially to the downside. And right now, the market in general went, from the high, I think it was high 20s to like 17 on the multiple forward earnings, just as a whole, as a market, right? So most tech stocks were like trading at ridiculous multipliers. And knowing that a stock is trading at, let's say, 20, just to use a round number right now, and knowing the market's at 17, could go to 15, maybe even 12, that's what you need to look at. Not that it's a $200 stock and it could go down to 100. You need to take the market cap and the amount of shares that are available and know what the multiplier is, because that's how far it can drop, not just half or 50. So if it has really no earning potential and it has a high multiplier, when you start cutting that in half, it's more than 50% of the share cost usually. So knowing if a company is profitable or not will kind of keep you out of a PTLR situation or something like that. That's a good example.
Yeah, absolutely.
But that's where the share price will go when the downside takes over. Is, all right, this only needs to be valued at 12 times forward earnings. What is that? And then you can get a price, or at least a close range, and then kind of look at a chart. Because sometimes it's just not a TA level or a flow read that's going to take over on, especially on these downside moves. I should have talked more about that, like when Netflix was falling, because that was a great example.
Right. Yeah. Oh, yeah, for sure. And I get, yeah. So like, they can't, I mean, I get, that sounds kind of simple, but like they, what you're talking about is more important than, like, as I look at like, daily RSI or something like that.
Yeah. That's not
because it's just, because those fundamentals can just overwhelm those kind of like rudimentary technical indicators like that. 100%. So, yeah.
And that's what makes oil the better play. That's kind of where I want to transition. That's why when you brought up oil, because they actually have pretty good earnings, so their multiplier isn't going to fall as far. Like them dropping 3 on their multiplier isn't a huge drop, and especially right now because they're all doing great on the earnings side. So even if the market does take over and correct, they have less downside because they're of the way they make money.
Yeah, no, exactly. And in those situations, those TA patterns, everyone likes to talk about like a cup and handle or something like that. You do actually see some follow through on that, where you get a pullback and then buyers step in and then they push it higher. So yeah, I'm with you, and I've been on oil like that since well, like, I don't know, at least last fall, and it's been working pretty well. Like Oxy for me, like back at like 23 or 28, I started to kind of see where this flow is going. I mean, it obviously exceeded my my expectations. If I had went all in on Oxy, you guys probably wouldn't hear from me. But it's so yeah, so I'm with you, and it's the same reason that I really like basic materials, where I can see, okay, what's the actual price of copper right now, and it kind of anchors me a bit. Uranium, same kind of deal. So that's kind of where I retreat to in um, these sort of moments.
Well,
Okay, so
people
that's all.
people trade off of all kinds of everything, and some people trade off of pure fundamentals, and those guys are bargain shoppers. They're around in this environment, so when it makes sense from that side, that's going to take over the market just in general, whether it's a short or a long position. Like that's what a short basically does is goes and evaluates fundamentals and says this is overvalued, right? That's what a short.
Yeah,
That's what a short like. Um, what the fuck? I always forget the Hindenburg. I mean, that's the basis of their business is they go and research a company and say this is overvalued per the multiplier. So that's literally just a trading style where right now that sometimes takes over. So all right, yeah.
yeah,
So
and that's where, I mean, your average you know retail trader, amateur kind of has a misconception of what a short is. I mean, because to them, a short is like the enemy of the movement, right? Of AMC or whatever. But yeah, what you're talking about, bringing prices more in line with reality is part of what shorting's all about as well.
yeah, and then just the bigger picture that there's so many different angles in the market, and I think people get narrowed in on their angle, right? Like the flow read,
Yeah,
someone bought all like how people misuse whales, right? Like the flow, if someone bought a bunch of them, isn't the price going there? That's just one angle in the whole market. You need to like kind of have awareness of every single angle, and then understand what people are really trying to do. Because we kind of talk about that privately all the time about flow reads being like sold puts being a good thing.
yeah. Oh yeah, and that's where the whale alerts can get you into trouble, because for one thing, they're often late. Like you'll see a whale alert for something that was in my notes like 4 or 5 days ago. Um, but also, the alerts, unless you dig into it, really lack context. And what else are they buying? Where does this contract sit in like the bigger picture? And then where is the stock kind of TA wise? Because if you try to use the alerts as buy signals, you're just going to really get destroyed. And that's what a lot of people try to do when they first get started.
Traded, yeah, 100%. Perfect.
All right. So yeah, so I'm good to get into our.
All right, let me
Our
let me stop this one.